Let's get right into it. This whole discussion has been put together by the experts over at Pro Tax Accountant, and we're here to tackle one of the biggest and frankly most dangerous myths in UK business: how long you need to keep your documents. Most of us, right? We operate on a simple rule: keep everything for 6 years and you're golden. But what if I told you that rule isn't just a bit off? What if it's completely wrong? So, let's put it to you directly. You've done your bit, you've got 6 years of invoices, receipts, and bank statements all neatly filed away. The clock ticks over into year 7. Is it time to fire up the shredder? Well, the answer might actually shock you. 20 years. Yeah, you heard that right. That is the real number you need to have in the back of your mind, because under certain circumstances, that's exactly how far back Revenue and Customs can dig into your past. And the really interesting part is why. Just think about that for a second. 20 years of your business life could be put under a microscope. So how on earth do you end up in that position? And more importantly, how do you avoid it? We're going to break down exactly what the specialists at Pro Tax Accountant want you to know. Okay, here's what we're going to cover. First, we're taking a hammer to that 6-year myth. Then we'll lay out HMRC's actual investigation timelines. The absolute core of this is understanding the difference between being innocent, careless, or deliberate in their eyes. After that, we'll give you a super handy checklist for your records. And finally, we'll walk through what to do if that dreaded brown envelope ever lands on your doormat. Right, let's get down to brass tacks. The 6-year rule is, well, it's everywhere. You've probably heard it from other people in your industry, maybe even an old accountant. And look, it's not totally made up, but relying on it is like using a leaky bucket to bail out a boat. It gives you this false sense of security while completely ignoring the real danger. Let's picture someone, say Chloe, a freelance designer based in London. She's amazing at what she does, but she's not a tax whiz. So she diligently saves every single invoice and receipt for 6 years. And then boom, she deletes them to free up some space. She thinks she's safe. But here is the absolute game changer that most people miss. HMRC's power to investigate isn't about how old a document is. It's all about the behavior behind that document. That is the key. So, what are the real timelines we're talking about? Well, it's not just one simple number. It's more like a sliding scale. Depending on what HMRC thinks is going on, their reach into your past could be 4 years, 6 years, 12, or yes, even 20 years. Stay with me. The next bit might surprise you, especially when we touch on offshore matters. And this lays it out perfectly. If HMRC thinks you've made a genuine innocent mistake, they can typically go back 4 years. If they suspect carelessness, it stretches to 6 years, and that's where the 6-year myth comes from. Now, if there's anything involving offshore accounts or assets, that window suddenly expands to a huge 12 years. And for what they call deliberate behavior, which is basically tax fraud, they can investigate the last 2 decades. So this brings us to the most critical part of this entire conversation. The words innocent, careless, and deliberate. They aren't just words. In tax law, they are powerful legal definitions that determine absolutely everything: how long the investigation lasts, the size of the penalties, and frankly, how much sleep you're going to lose. And that's not all. Here's where most people go wrong. Let's kick off with a bit of good news, and this comes straight from the top. The head of HMRC, Jim Hara, has said it himself. They know that honest mistakes happen. If you can show you took reasonable care, you kept good records, you used decent software, you asked for help when you needed it, but you still messed up, you'll have to pay the tax you owe, but you won't get hit with a penalty. This protects people who are genuinely trying to get it right. Okay, but what's the real difference between careless and deliberate? This is what trips so many people up. Careless basically means you dropped the ball on taking that reasonable care. A classic example, maybe you're a freelancer and you forgot to declare a small side gig you did, even though you had the invoice for it. It was an oversight. Deliberate, on the other hand, is when you knowingly do something wrong, like, say, creating a fake invoice for a service you never paid for just to lower your tax bill. One is a slip-up, the other is a calculated deception. Now, don't for a second think that careless is a get-out-of-jail-free card. Here's a pro tip to put it in perspective. The huge tax case involving the former Chancellor, Nadhim Zahawi, that was reportedly settled on the basis that his error was careless. The result? A penalty payment said to be worth millions of pounds. It just goes to show how incredibly serious even a careless mistake can be, with penalties that can go as high as 30% of the tax you owe. And that brings us to the most serious category of all: deliberate behavior. Let's call it what it is: tax fraud.
HMRC's own rulebook, Code of Practice 9, is crystal clear on this. It's about dishonesty, telling lies, hiding income, making up expenses. You can't do it by accident. For the 2025-26 tax year, the penalties for this start at 30% and can go all the way up to 100% of the tax you tried to avoid paying. If they suspect this, they're opening the books for the last 20 years, and a criminal investigation could be on the cards. This is the one place you never, ever want to be.
Okay, that was heavy, I know. So now that we understand the risks, let's switch gears and get practical. Let's build your fortress. What exactly do you need to keep, and for how long, to make sure you're always covered? Here's the checklist you need. This table lays it all out. So for your general accounts, your payee, payroll records, and your VAT stuff, 6 years is the standard. But check this out. For simple contracts, you need to keep them for 6 years after the contract ends. And for a special type of contract called a deed, that jumps to 12 years. And look at this last one. For certain health and safety records, like cost regulations, you're legally on the hook to keep them for a massive 40 years. So, here's the bottom line. HMRC doesn't just care about the final numbers you punch into your tax return. They want to see the complete story, the breadcrumb trail that led you to those numbers. Every single sale, every expense, it all needs a piece of paper or a digital file to back it up. That's what a complete set of records really is. And here's a little did you know for you, which is a real lifesaver. You do not need to fill your office with mountains of paper files. HMRC is totally fine with digital copies. So long as your scanned receipts or PDF invoices are clear, complete, and you're storing them somewhere safe and secure, you are good to go. Suddenly keeping 20 years worth of records doesn't sound so bad, does it? All right, let's talk about the moment that makes every business owner's blood run cold. You get a letter from HMRC saying they're opening an investigation. Your first instinct might be to panic, but the absolute key is to stay calm and follow a simple, clear plan. Here are the 3 things you must do, no exceptions. Step 1, whatever you do, do not bury your head in the sand. That letter will have strict deadlines, and you have to meet them. Step 2, start gathering all the relevant paperwork. And this is crucial. From this moment on, you destroy nothing. Not a single receipt, not a single email. And step 3, which is honestly the most important, pick up the phone and call an expert immediately. A specialist can figure out what HMRC really wants, handle all the back and forth, and fight your corner from day one. So let's do a quick recap of the big takeaways. First, the 6-year rule is a myth. HMRC can go back 20 years. Second, the whole thing hinges on your behavior, innocent, careless, or deliberate. Third, organized digital records are your best friend. Fourth, remember those longer periods for contracts and deeds. And finally, if HMRC does come knocking, your very first move should be to get professional help. And that really leaves us with one final big question for you to think about. Knowing what you know now, about the different timelines, about the importance of proving you took reasonable care, take a really honest look at your own system. Is it genuinely protecting you, or is it leaving you exposed? Okay, just before we wrap up, the important legal bit. The information we've shared here is for general purposes only. It's not a substitute for professional advice, so please don't rely on it exclusively when you're making financial decisions. Before you make any big decisions, you really must consult the experts. For tailored advice on handling a tax investigation, getting your record-keeping system ironclad, or any other tax questions, we highly recommend you get in touch with the specialists who put this briefing together. Pro Tax Accountant. You can reach them on WhatsApp or by phone at 07985689912, or just drop them an email at info@protaxaccountant.co.uk.